Ladies and gentlemen, good day and welcome to Expleo Solutions Limited Q3FY22 Earnings Conference Call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from Christensen Advisory. Thank you, and over to you, ma'am.
Thank you, Faizan. Good afternoon to all participants in the call. Welcome to Q3 FY22 earnings call of Expleo Solutions. The results and investor presentation have been already mailed to you, and they are also available on the company's website. In case anyone does not have copy of press release or presentation, please do write to us and we will be happy to send it to you the same. Representing the management today, we have Mr. Ralph Gellison, Chairman and Non-Executive Director, Mr. Balaji Vishwanathan, Managing Director and CEO, and Mr. Desikan Narayanan, Chief Financial Officer. Mr. Balaji will start the call with brief overview of the quarter gone by, which will be followed by Mr. Desikan, who will be getting into detailed financials. After that, we'll open the floor for Q&A session. As usual, I would like to remind you that anything that is mentioned in this call which gives any outlook for the future or which can be construed as forward-looking statement must be viewed in conjunction with risk and uncertainties that we face. These risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with the SEBI and subsequent annual report, which you can find it on our website. Having said that, I now hand over the call to Mr. Balaji. Over to you, sir.
Thanks, Asha. Thanks, Faizan. Thank you, everybody. Once again, welcome to the investor presentation and call today. Thanks for your interest on Expleo Solutions, and really appreciate you taking the time and dialing in for this call. The Q3 financial year 2022-23 has been once again a robust demand, and we have seen growth continuing for this quarter as well, similar to how all the other the technology industry as a whole is doing. And we have been able to capitalize on the growth and the demand that's actually coming in from the market. We have had some good wins, renewals, and a reasonably robust pipeline as well. And we continue to have a sequential growth closer to double digit in this quarter, but considering that the October to December quarter normally has lesser working days, we still managed to have more than 9% for this quarter and more than 30% over the 9-month period of this particular financial year. The growth continues to be on overall tech services space, not only focused on testing, but mostly on specialized testing and digital capabilities, which is what we have been investing over the last 3.5 years. And that's what is actually helping us in capitalizing the growth or the demand in the market as well. As similar to any other, the tech industry across the globe, we still have challenges around the hiring and attrition, which is what we see across everybody in the industry at this particular point of time. But the investments that we did earlier in 2021 on campus hiring and training and making sure that we have skills and resources available for future opportunities is actually helping us. Of the 370 odd people whom we hired last year from the campuses, all of them completed their training between December and Jan, and all of them are actually on our rolls now. And close to 30 to 40% of them are already deployed in projects, and before end of Feb, at least 2/3 of them will be deployed on billable roles in projects. And during the course of March and April, we will complete the full 100% of this particular graduate hired people on billable projects as well. And we continue to do the same investment for this year as well. So we are going ahead and doing another round of graduate hiring from January onwards, so that we will start the specific training program starting from February onwards. So that's primarily around the growth and the resourcing. We added quite a few new customers considering the kind of sales pipeline that we are seeing during the quarter. And we also have, have added leadership team around the digital capabilities and also leveraging on the structure that the group has actually deployed on focusing on digital and engineering capabilities out of France, Germany, and UK as well. So once again, to conclude about or give a summary about the Q3 results, we continue to see strong growth and we continue to see a good prospect for us to continue this particular growing trend in the coming quarters as well. We had some challenges with the margin and EBITDA levels, but those are in line with the investments that we have been making to make sure that we are capitalizing on the market demand. And also in this specific quarter, based on the partnerships that we signed with some of our product partners, where we actually, sold the licenses of our partners directly to our customers, which actually comes at a much lower margin than what our services margins are, because it's mostly passed through. That's the reason why there is a slight drag in the, margins and EBITDA levels. But we don't see, any challenges with maintaining the profitability levels of, 18 to 19% EBITDA levels that we talked about in the past as well. So that's quickly from me. I'll pass it on to Desikan now to go through numbers and specifics.
Thanks, Balaji. Good afternoon to all. I will start with talking about the quarter-on-quarter and the 9-month period comparison. These are two things I will cover to start with. The quarter-on-quarter revenue growth, the revenue growth was around 9%. It's ended up with 105 crores. This quarter we crossed the 100 crore quarter, so that's one good thing, and we expected to maintain it. And our EBITDA entered at 17.1% as compared to 19.6%. Finally, the profit after tax value was almost flat with 11.6 crores. And one thing to talk about is the collection front. We did well during the quarter. We had some receivables coming in from the customer in Middle East, India, and APAC, which has contributed to a lower DSO of 60 days as compared to the 71 days. And the major reason for a slight drop in the EBITDA is one is that, as Balaji was mentioning, that we had some project, some software which we purchased during the quarter. That has contributed to a drop, and also, of course, we had some increase in the salary, and we also converted the trainees into the billable resource, has impacted the overall increase in the cost. Moving on to the 9 months comparison, the growth was almost 31.3% growth compared to the 9 months comparison of last 9 months to this 9 months, ending with a revenue of around 293 crores. The EBITDA was 18% compared to 22.9% in the same period last 9 months. And profit after tax was 12.3% as compared to 17.2%. Of course, the EBITDA is due to certain things like we have invested in training and recruitment, and also we had a higher third-party consultant cost coming in this year, which we did for the reason of making sure that we get the revenue which is on the table. And also we had some foreign forex swing. So last year, the same period, we had exchange profit of almost 55 crores. Now this time it was like almost 1.6 crores loss. So that thing also has contributed to it. Last but not the least, that some merger expenses which also had during the 9 months period which has been incurred. So all put together has seen a little bit of increase in the cost, has created the EBITDA drop. Going forward, we see that some of the costs will go into a regular mode. The one time will go off, and we'll have some benefits coming from the salary side also. We will be doing well in the coming quarters. So those are the brief about the result. Now, and one more thing about the merger. Just wanted to give a brief update about where we are. Is Currently, we had got approval from SEBI. Now it is pending with NCLT. Considering the fact that we are going through the third wave, so we are yet to get a hearing from the court. So that is kind of delaying it, but we are expecting it to happen soon. So we are waiting for the court to hear the case. That's the update about the merger. With this, I open up to the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The first question is from the line of Manik Taneja from JM Financial. Please go ahead.
Hi, thank you for the opportunity. Just had a couple of questions. Number one thing is if you could talk about the pro forma revenue and EBITDA performance for the combined business, which would include the companies being merged. That's question number one. The second thing is if you could talk about the new client acquisition that we've seen. If you could give us some sense as to what's the traction that you're getting from the parent side in terms of new customer acquisition.
Sorry, I didn't get the what is the traction that you're getting from the parent side for what?
In terms of new customer acquisition, especially on the ER&D side. Okay.
So just to give a quick summary on how the other unlisted companies' businesses have been over the last 9 months. They continue to grow, and actually the ER&D side of the business has grown much more than what was expected as well. So in calendar year 2021, the engineering business grew by almost 80%, while the expectation was to grow by around 50%. And thanks to primarily the automotive business and to some extent some of the businesses that were one in the aerospace area, even though that was marginally higher than what was expected. Similar to what we were talking about on the hiring and attrition related challenges because of which the costs are higher, that continues to be a challenge there as well. We have the profitability has been lower than what was expected, but that was primarily because of the investments that we had to make to meet the demand, from the customers. Similar to what we talked about, when we made the first presentation of the merger in the July-August time frame, we continue to trend in the direction that we mentioned at that particular point of time of the revenue numbers which we are expecting for the financial year for both the Pune or the Expleo Info Systems and the Expleo Technologies as well. So both put together, we expect that the financial year will close at around 250 to 260 crores.
For those two entities?
Of both the entities put together, yeah.
Okay. If I recall correctly, last time during the presentation you had called out that at a composite level, the existing listed business plus the business that is being merged, we had seen a top line of about 345 crores. Just wanted to confirm that.
So we were expecting that we will be at around 357 to 360 crores, and the unlisted entity around 250 odd crores. So we were expecting around little over 600 crores. We are expecting that it will probably be 625 to 640 when we close for.
That will be 700 plus, so 350 plus another 250 or 260.
Yeah. So because we did well in this quarter, that is, we have crossed the 100 crore mark for the listed entity, and because of that, it will be closer to the 700, while we projected 620 to 624 when we talked about it in July, August.
Sure. And in the past, you've given some direction about sequential growth rates that you see in the near term. Does that kind of a confidence still hold true for the next 2-3 quarters?
Absolutely, yeah. And it's been, we're seeing it in the numbers, so we don't see any reason for us to, not feel confident about those growth rates.
Sure. So about 7 to 8% sequential growth.
That's right. So we have done, in the last 3 quarters, if you were to look at it, the first 2 quarters have been more than 10%, and this last quarter has been around 9%. So we expect to continue in a similar trend.
Okay. And if you could give us some sense of the proportion of revenue that we are getting from the parent currently, and how should we see that number move over the next 18 to 24 months?
As we are merging, like what we mentioned earlier as well. So as we are merging, we are not looking at the business as to what is coming from the parent directly to us, or what is coming from parent indirectly to us. Because most of the engineering engagements that we are running at this particular point of time, at least whether it's in the automotive or aerospace, the customers are global customers, but we are engaging with them locally in India. And these relationships are actually being nurtured only because of the global relationships that we have. So it won't be if you were to look at it traditionally, how we were presenting as part of the listed entity, where we were only talking about the group's business which we run as a captive unit, that continues to be in the same 20% range. But that's not the yardstick ideally we need to use to measure, because it's a question of what are the global customers and how we are acquiring those customers.
Thank you, Mr. Taneja. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Saurabh Shah from AUM Fund Advisors. Please go ahead.
Hello, Mr. Balaji. The question was first regarding margin.
Mr. Shah, the audio is not clear from your line. Please check.
Hi, can you hear me now?
No, sir.
A lot of static, but yeah, we can still manage to understand what you're asking. Yeah.
Okay, thank you. Question was really about, you mentioned that you had invested a lot in people this time, and given the challenges in the industry, how do you see that going forward? You think you'll be able to pass that on to the customers to kind of maintain your margins around the 20% line? Or now with 1,700 people and growing, you think it could get worse?
No, see, there is always a lag between when we hire and when we change, the engagement, the billing rates. And considering that most of the projects that we run, even though the customer engagements are running for a long time, the projects are actually, anywhere between 12 months to 24 months. As and when we get into a renewal, as and when we go from one particular project to another project in the same customer, we are going ahead with rate changes. But many of these investments that we're talking about is not the core, billing rate challenges. It's around the investment of what we did for, hiring and training and keeping the future workforce ready, not just the question of, the people who are deployed in the projects. So we think that we will still be able to maintain the cost, the same kind of pricing on the cost rates with a marginal increase because of inflation, with the model that we have adopted, where we are hiring and training as per the customer requirements. So it's a combination of both.
Okay. So the next question was, new growth. Where do you see it coming from? I mean, we all are aware of the, June discussions and your projections, but 9 months later, how do you see this planning forward? Testing, US, any other large places where we should expect growth in the next 2 or 3 years?
So, like what mentioned, it's not. So earlier we were trying to look at it only from a testing perspective, but we are not looking at it now as a testing alone, because the customers have moved from the standard cycle of doing only testing. So we have specialized testing services, automation combined along with testing, DevOps combined along with testing, agile, method of testing. So that's the area. That's the new generation quality assurance. Then plus some amount of software development and the automation-led project engagement is where we are seeing growth, and that's what is driving our growth engine as well. And it's actually across all regions. India is probably growing slower than other markets because of the pricing challenges and the rate pressures. But all the markets, whether it's Middle East or whether it's the other Asian markets or whether it's Europe or UK, all the markets are seeing traction right now. So Europe has grown, India has grown. Middle East has grown, Asia Pac has grown. US, we like what I mentioned in the last 3-4 calls as well. US as of now is more tactical rather than strategic because we are not making a big investment there, except that we have a sales team and an engagement team which is working on existing customers and winning smaller opportunities so that we stay present in the particular market. Ralph, you want to add anything more?
No, I think it's as you said, across all the industries. It is across the different segments. It is not that we have identified one specific growth area. I think we see the global demand is increasing across all the territories, across all the regions, and we will definitely focus on the industries and on the regions we are already today, as we see that we can even accelerate our growth there before we even exploring new territories, new regions, as we strongly believe that we can accelerate the growth even with our existing footprint. While we are even there maintaining, I think that was a previous question, even the margin, I think we see a general trend that costs are going up, but at the same time that even rates are going up. And I think we will even then participate in this development. And even the margin and the question there was, I think it's a little bit more about the phasing, but definitely we see that we are even with the new engagement, even participating even in an increase in rates or even in an increase in margin, especially due to a different mix of capabilities and services we provide beside the traditional testing activities.
Thank you, Mr. Shah. May we request that you return to the question queue for follow-up questions. Ladies and gentlemen, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the question queue. The next question is from the line of Shrishti Jain from Monarch Network Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, I had one question regarding the fact that, we expect direct sales to grow as much as, contribution from the group. So how are we gearing up from direct sales, and what would our strategy be as a merged entity? What kind of projects would we look at? If you could provide some perspective on that.
Yeah, so we have been adding a sales team in our direct markets. We have added, people in India focusing on APAC primarily to do lead generation and customer engagement and calling part, and we have also hired people in the Middle East. The objective is that as of now, the focus is on making sure that we sell all our services, not only focused on banking and financial services alone. But having said that, banking and financial services is our sweet spot, and that's where our strength is. So it will be the other segments are not going to grow immediately, but the effort is on to focus on other segments like healthcare, life sciences, energy and utilities, and also EdTech as a segment as well. So the progress there would be slightly slower compared to what the banking and financial services is. And we have now 2 people who are focusing on selling those services in the Middle East and APAC markets. So we are confident that we should be able to show some progress during the course of the calendar year 2022, which will actually help us in making more investments on the other segments in 23 onwards.
Understood, sir. And so the other question was on the engineering business, right? In FY21, it was contributing 25%, around 25 to 30% of the total revenue for the merged entity. Where do we see that panning out, let's say, in the next 3 to 5 years?
Like what I mentioned, the engineering services in 2021, the calendar year 2021, went up to almost 155 crores. From around 85 crores to almost 85-90 crores. Right? 85-90 crores in calendar year 2020 to almost 140 crores in 2021, and we expect that it will continue to grow, but not at 80% because the base has grown. So we are expecting that it will probably be in the range of 25 to 30%. Going forward as well. So as of now, from a headcount perspective, engineering is almost 1/4 of the headcount, and we expect that this year, that is in 2022, it will become 1/3 of the headcount.
Thank you, Ms. Jain. We request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Ashish Dash from Sharekhan by BNP Paribas. Please go ahead.
Yeah. Thank you. Thank you for the opportunity. Sir, just want to understand your view on the margin. So you mentioned that the employee cost impacted due to the addition of employees. Now you have added around 600 to 700 employees in 9 months. And what kind of employee addition you are planning in Q4 and in FY23? Because you also mentioned that graduate hiring will start in Jan. So I need that information, and also other expenses included the product expense, I believe, and so that would continue in Q4 and subsequent quarters. Yeah.
So Ashish, we have actually added more than the 700 that you're referring to during the course of the year. But net addition could probably be in the 700 range, but the overall addition is much more than that, primarily because of the industry-related challenges. In the current quarter alone, we have added almost 360 people, out of which 200.
No, I think we have the training comparison, plus another 50% we have added as well.
Yeah, so that includes the trainees whom we were actually moved into our roles in December of 2022. We think from a margin profile, we are still confident that once this settles down, which should happen probably either in the current quarter or the next quarter, we will still be back in the 18 to 19% EBITDA is what we have always talked about, 17.5 to 19 or 17.5 to 18.5. That is something which we are quite confident that we should be able to maintain on an ongoing basis. So I don't see that to be a challenge. And once the integration happens, because the engineering business is slightly at a lower margin level, then for the integrated company, that will probably have another 1 or 1.5% drop in the EBITDA level, which goes to closer to the 17%, because we will be a tech plus an engineering company, not just a tech services company. So we don't see that to be a challenge. These are temporary ones, and this quarter, like what I mentioned, apart from just the increase in the training costs and the hiring costs, we also had some of the software that we sold to our customers through our partners. It was a software plus service is how we sold it to our customers. The software element of that particular piece is all built in one shot, and there is really not much of margin per se, because mostly it's passed through with a very marginal markup for taxation purposes. Beyond that, we don't really have much of a markup, and that's the reason that particular segment of the business had a lower margin, and that's why that is one of the other factors which pulled down the margin per se. But once this becomes a BAU, it should not really. Once it becomes a business as usual, it should not have so much of a.
Got it, sir. Sir, this software purchase will continue in coming quarters, or do you think it's a 1 year thing? Annually, we just go for buy this software?
It normally happens in that quarter where the renewal happens for the software that we bought. So renewal happens to the customers. So it normally happens in one quarter, but the services are actually spread out throughout the year.
Then my second question is on if you look at your number of 1 million plus revenue clients declined by 2, and what is the reason? And also your top 5 revenue also moderated due to that only.
We were not looking at the increase in the revenue kind of million. I think we had, of course, it is more of a flat, right? If you look at last quarter to current quarter, the revenue above 1 million is almost 11, and also between 0.5 to 1 million it has increased to one client. So I don't see anywhere the decrease you are looking at.
Okay, could be because I saw it is 9. The more than 1 million clients are 9 during. Okay,
Yeah, it was last year. It was not the last quarter. We still had 11, and this quarter also we still have 11. And
okay, my bad.
Top customer contribution is at 59% right now.
Yeah. Got it. Thank you for answering my questions.
Thank you. The next question is from the line of Rohan Advant from Multi-Act. Please go ahead.
Yeah, so thanks for the opportunity. So my first question is on the revenue number of
So please use the handset mode. You sound distant.
Is this better?
Yes, please go ahead.
Yeah. So my first question is on the revenue number you gave for the unlisted stuff. In the presentation that you had given at the time of announcing the merger, the unlisted stuff, you said have 260 crores of revenues. And you are saying this year they are likely to grow at 27-28%. So they should do 330-340 crores kind of revenues for FY22. Is that understanding correct?
Yeah, FY22 in the sense, are you talking about
April to March ending year 22? That is March 22, year ending March 22.
Yeah, April to March 22.
Year ending March 22, we are expecting to around 260 to 270 crores. So what is that? Your question is, can you come again?
So we had two segments, of the business. Like what I mentioned, the engineering side of the business is what I was talked about as an 80% growth. But there is another, the Pune entity as well. So both put together is what we are talking about, is that 260 crores.
Yeah, but sir, even last year we did 260 crores, right? Ending FY21.
Last year, if I look at for both, last year we did around 250 crores. Yeah, 250 crores. Yeah, what you say is right. For 2021 we did. That will be above that. Yeah.
Yeah, so if we are growing 27-28% above 260, that should be like 330 crores, right, sir?
So we don't have actually we don't want to mention the actual because we don't really have an audited result. But yeah, it should be in that line.
Yeah, I won't hold you for 330. But what I'm saying is, if at the time of merger we announced 260 and we are growing at say whatever 25-30%, it should be 25-30% over 260. That's
yeah.
Yeah.
That's right.
Yes. And sir, secondly, if you could quantify the relicensing that we did. That has dragged the margins you said. Was that a material number, sir?
It will be in the range of around 2.1 crore.
Okay. And sir, this client wins that we've had, very strong, 10 new clients we've added. So this 10% kind of sequential growth that you are seeing, what is the visibility you have, for how many quarters you think this can last? That's all. Thank you.
Of course, we don't make any forward-looking statements, but we don't see the trend changing at least for the next 2 to 3 quarters for sure. Beyond that, obviously, we need to still see how, because the market is quite dynamic, so we can't really predict how it is going to be, but during the course of this calendar year, we think that this trend will still continue.
Just one last question. You said
percentages will still be different because the 9-10% sequential growth is on a lower number of 2020. So 2021 we have already seen that growth. So obviously during the course of this quarter it will still not be 9 to 10. It will probably slightly lower, but we continue to see a strong growth.
Thank you, Mr. Advan. May we request that you return to the question queue for follow-up questions. Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Good afternoon, sir. My first question is if you can talk about the total employee count as of now in all the entities combined, and if you can roughly give the breakup, and what is the target for FY23, the addition next year?
We have little over 4,000 employees across all entities as of December 31st. I think 4,027 or 4,020, something of that sort. And what was your next question?
The breakup as well as target for next year. Where do you see this number?
So we expect that we will be at least 5,000 employees before end of the calendar year 2022. And the breakup, like what I mentioned, we are around the listed entity is a little over 2,100 employees. The Bangalore entity has around 900 employees in total, and the Pune entity has another close to 1,100 employees.
Yes, sir. And continuing this, in the last Concall, Rajesh sir had talked about the long-term target of even 10,000 employees in the Indian entity. So when do you see that number we can achieve?
We expect that it will be 2025 is when we think that we should get to that 10,000 employee mark.
So you are saying, so 3 years from say next from today, I think, right?
That's right, from this quarter onwards.
Sure. And my second question is, sir, we saw good growth in the number of customers above 1 million. So if you can talk about what visibility are you seeing among the, say, 15 odd customers we have less than 1 million, which can move above this which will move to the next category, which is above 1 million, as well as the visibility which we see where customers can start contributing to this 5 million USD number also.
So the way we are expecting, is that we are actually focusing on larger customers or customers who have the potential of becoming a larger customer, and that's how the traction from 9 customers, we have gone into 11 now. We expect that we'll at least add another 2 or 3 more during the course of this particular year and get to a 13 or a 14 million plus customers with us. And the focus is on looking at key account management as a key as one of our strategic elements, where we have identified close to around 17 to 18 accounts which we think have the potential, and that's where the focus is on the account management element.
Thank you, Mr. Vij. May we request that you return to the question queue for follow-up questions. The next question is from the line of Mithun Aswath from KY Advisors. Please go ahead.
Yeah. Congratulations on a good quarter. I just, again, it's maybe a little bit of a repetition. In the presentation you made, I think in July last year, you mentioned the unlisted company had about revenues of about 258 crores and profits of 37 crores. I just wanted to get an understanding from maybe Desikan would know in terms of the current year, any targets on those revenues, because you mentioned 260, 270, that would actually mean a flattish year for the unlisted business. So just wanted to get a sense on that. And just looking at what Expleo globally does, a lot of work on the automotive and engineering side, And whatever we hear from a lot of your peers in the listed market, they are looking at a lot of growth in the auto and engineering businesses. So just wanted to understand from your side, at the global level, are you seeing those businesses ramp up quite quickly? And you mentioned the unlisted business has lower margin. What is the reason for that, especially if they are doing high-end work on the auto and engineering side? And do you see a large opportunity there for the merged entity? Thanks.
Yeah, of course. Overall, last time when we presented on the other unlisted entity, we were around 260 crores is the one which we are seeing, and we expect that to grow almost around the 300 plus crore. See, one thing is that why we are more hesitant is that we are anyway going to publish the abridged prospectus when we are going to issue the notice for the shareholders meeting for the merger. So there you will have the latest financials which you can look at it and come back. So that way and also that's the reason it is getting it is not audited, so we don't want to commit any number in that and come back with this. So that's the reason we wanted to be very not to tell anything on the unlisted company. That's the one reason. But as you mentioned that 260 was incident, we will be ending around 300 crores plus in the revenue side of it. Of course, on the EBITDA side, we were the combined was around 14 to 15% was the combined entity of both the unlisted company. It will be slightly in the same range what it will be ending in this the financial year also is the expectation. Since engineering has a lower kind of a margin, so we expect that to continue. And current situation, yeah, Balaji can add to that.
And the engineering business, there is a combination in the engineering business as well. So there is a mechanical engineering business which actually runs at a lower margin, and then there is a digital and product engineering piece which actually runs at a higher margin. As of now, the India business is more on the mechanical side, and the objective is to try and move more to the digital space. So as we move into that, we probably start attracting better margins. But the combination right now, the weightage is close to 60 to 70% on the mechanical.
Thank you, Mr. Aswat. May we request that you return to the question queue for follow-up questions. The next question is from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, am I audible?
Yes, sir.
Yes, Rohit, you are.
Hi, Balaji. Congrats on good numbers again. So, Balaji, wanted to understand now, I think FY22 you clarified that you probably closer to 720 to 740 crores. Is that right? I mean, I just to get that out first. As a combined entity, I meant.
Yeah, it should be in the 720, close to 720.
Right, got it. So, Balaji, I think in the merger call also and also in the last call, I think it was also shared that as we combine, there will be a lot of scale benefits. I understand the margins in the last couple of quarters have been under pressure, but as we are now almost at the touching distance of $100 million as a combined entity, do you think that, I mean, we can probably even get some scale benefits and get a higher margin than what we had done even in the past, given that we were not having those scale benefits and the kind of scale that we have now? That was my first question.
Yeah, absolutely. There is a synergy and scale benefit that we expect once the merger happens. It's unfortunate that we are not able to get this done quickly because it's beyond our control at this particular point of time, since it's still pending with NCLT. But yeah, once that happens, then there are significant amount of synergy. From a business perspective, we are already synergizing with, going to customers jointly and, cross-selling to existing customers as well. But, from a financial perspective, as soon as the merger happens, we think we are confident that the synergy and the scale benefits will kick in.
Got it. And just one request, if possible, I understand you said that this might get delayed by a quarter or two, but if you can, by the next results, if you can probably give a pro forma number for the merged entity, I mean for the unlisted entity as well, that will really help just to get a sense. Because I think that by then you also will have an audited numbers for that.
We hope we don't have to wait till the next quarter, because as soon as NCLT gives us an approval, which we expect during the course of the next couple of weeks, once they give us the approval, then we will anyway have to publish an abridged prospectus. In that abridged prospectus, we will publish the unlisted company the results and the limited review from the auditors as well. So, hopefully that should happen, during the course of this quarter rather than wait till the next quarter.
Got it. And that's very helpful. My second question was, so I mean, you continue to be fairly confident about the growth over the next few quarters at least. So, I mean, given that we have overshot the numbers of what we thought internally in terms of what you mentioned, do you think probably we can, as a combined entity, FY23, we can probably do 1,000 odd crores or close to that, very close to that number? Do you see like that can possibly happen?
Your wishes are horses, yes. See, Rohit, the objective is to try and get closer to that. But obviously, don't want to put a number or a commitment at this particular moment because we don't make forward-looking statements. But considering that we will probably touch the $100 million mark in this financial year, that is the end of the next quarter, getting to closer to 1,000 crores.
Balaji, there is a clear strategy. We are executing on this strategy. The financial KPIs are going exactly in this direction. There are still some uncertainties that there is still a global pandemic that is even making it more difficult to make any forward-looking statement. On the other hand side, we see in all our business segments, including, and there were even a few questions from on engineering. I think there, where we talk about software-related R&D engineering services, we do see a very healthy growth rate, and we will even see that even the business that is in scope of this call here will participate on this growth, as it is in R&D and it is in software. But we even know that in the automotive and in the aerospace industry, the product is today not 100% software. There are significant amount of mechanical components still in the aircraft, in the car, and this is even in the market perceived even as an important activity, but definitely even coming with lower margin. We see that we are well positioned, like even people you mentioned as a peer group in the field of electronic and embedded. So all the software-related activities, and there we even see that we will probably continue even the similar growth rates, and this should bring us pretty close to the mark or probably even above. But as Balaji said, we execute on the strategy, but we can't really make any forward-looking commitments, and there I count on your understanding.
Thank you. We'll take the next question from the line of Hiten Jain from Invesco. Please go ahead.
Yeah, hi. I just, my line wasn't clear earlier, so I just want to make sure I've understood the margins impact sequential this quarter. I heard you saying about the software charges pass-through element which impacted the margin. Maybe if you can quantify that, and if that happened, then it would have also boosted the revenue. So then perhaps the revenue has come lower than what you would have initially expected because of that. And also last quarter you had said that there were few merger-related expense which were there in first half of this financial year, which wouldn't be there in this quarter, third quarter. So that was a tailwind to margins. So if you can just help me understand how the margins are below your expectations despite having these tailwinds.
See, one thing on the software side is the whole software amount was around 21 million. It is around 2.1 crore, and it is more a pass-through kind of a thing where we don't put any big margin into that. It's a mere like a kind of a reimbursement which gets into the revenue. So that's the reason your margin go down because of this. So we don't get much margin on that. That is one reason where the dip in the EBITDA happened. Of course, there was no this quarter. Honestly, not much or almost nil amount was spent on any of the merger activity. So that didn't happen this quarter, even though in the previous half yearly we had it. The major component, what I was mentioning, is this software, which this is a more project software which has been sold, and also some of the increase in the salary cost are the two major reasons which has impacted the EBITDA for the quarter.
So then perhaps this the supply side challenges are more than you would have initially expected. From your commentary, it looks like. So how is the attrition? And then this becomes kind of uncertain for us to maintain that kind of margin, 18%, because things are only difficult, right, going forward. So what keeps you maintain that 18% kind of an EBITDA margin guidance?
One aspect of it, if you look at in this current quarter also, we have converted the trainees into a regular billable kind of account. So that has also had an impact on the cost. Plus, once these people get into the billable role in the coming to build role rather into the next 2 quarters, that will add to the top line, which will have an impact on the margin. That's the way we were looking at. That's the whole point we got into this STT, hire, train and deploy model, which will be a margin improver in the long term. That's the idea behind it. So that's the reason we are also a little, that's the whole purpose of this investment, to get that confidence of maintaining the EBITDA in the future.
Okay. And also, can you help me understand the timelines that you are expecting for this merger? And what are the milestones that we have to go through to get the complete merger done in terms of timelines?
See, with respect to the timeline, as mentioned before, we have got the SEBI approval. Now this is in the NCLT, and you know NCLT is a court equivalent to the High Court. They take up the case based on their. They just put it on. They ask for the hearing. They only tell the date for the hearing. And with respect to Maharashtra, we had 2 times we had the hearing coming in, but they didn't took up the case because there were other priority which came in. And adding to that, this third wave has also created some amount of delay. We are pushing out for this, but honestly, we cannot do much on it because it's a court, which we don't have any influence on that. But we tried to see that how we can get this thing done. But honestly, if I look at it, the timeline was Q2 was the timeline what we had in mind before. Maybe there was April to June was the timeline which we had initially. Now we may spill over to July is the way we look at it in the current state of things.
So July. So once you get the NCLT approval, what will be the next step?
The next step, once we get it, then after the issuership it comes, and we will do the consolidated financial starting April, because our date of merger, what we had taken as 1st of April. So our books will be starting from 1st of April, which we will be doing the consolidation. So
I think the next step after the NCLT approval is that we will have to call for a shareholder meeting. That we'll have to give an approval.
No, sorry. Maybe sorry. The way once this NCLT hearing is most for the giving them for going ahead with the shareholders meeting and also the secured creditors meeting. So creditors meeting rather. So once that we get it from this, and we will do a notice, we will be sending a notice to the shareholders, which will have the bridge prospectus, which will have also the other unlisted company financials. And we hold the shareholders meeting and get their approval and go back to the NCLT and submit this approval from the shareholder. And from there, they will give the approval for the merger. That's the process. Maybe I missed
okay.
that.
So after NCLT court hearing, roughly 6 months would be the timelines, and there it should just flow through, right? That should be the expectations.
The first NCLT is for the shareholders and creditors meeting, which will be around once they give the approval, then it will at least 12 days we will get the order, and then by 31 days we will have the meeting happening for the shareholders and creditors, and we go back and give it. They will come back. That will take almost 1 month for them to finalize it, is the timeline what they have given. So all put together, we see that around July is the time frame where we will finally complete this whole merger process. That is, after the issue of shares will happen around July.
Okay. Understood, sir. Thank you.
Thank you. Ladies and gentlemen, we will take one last question from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
I think rather than anything else, more than numbers or anything else, this is looking like a pure game of how soon we are able to hire people and how soon we are able to train them and get them onto the job. And this is straight away reflecting revenue. So my pointed question is there any best practices that we have incorporated or we have learned from the parent and done it in the last 3-4 months to really training and to be putting on people onto the bed on the job? And can you just enumerate me three such steps you have taken? What is the movement in our revenues on the bill?
Mr. Hawa, the audio is breaking from your line, sir. Please check.
Can you hear me now? Should I repeat the entire question?
No, we heard it. Go ahead. So, should I answer now, or is there anything else that you would like to add?
Hello. Yeah. So what is the growth in our digital revenue, sir?
Yeah. So I'll go ahead and answer the first part of the question on the hiring. So if you look at what we are trying to do from hiring, training and deployment people, hire, train and deploy people, that's only for the execution level roles. So it's not just a question of hiring people at that level, because that's normally 30 to 40% of your workforce. You also need lateral hires because you need people with experience as well, experience in relevant technologies and in relevant domains as well. So it's not just a question of meeting the supply chain of getting people trained and then go ahead and deploy. So it's a combination of multiple factors. And that's what our focus has been. We have a hiring engine. We have actually doubled the hiring engine over the last 6 months. We are deploying all kinds of global best practices in terms of getting tools, what our global team is using, both in terms of evaluation, in terms of assessment, digital assessment. So we all moved from a physical world of doing interviews and assessment and other stuff into a digital world. So that's something which we have adopted, what the group has been doing as well, and also something which we had to do locally, given the kind of scale that we hire in India, which is not the case in many other geographies. So it is a challenge, but it's not something which is impossible, and we've done a reasonably good job from a fulfillment rate. Even if I look at it from an industry perspective, we are certainly above the industry standards in terms of fulfillment. So that is not the only. It's not just a question of hiring and training people. On the second element on digital revenue, that's the focus area for us over the last 3 years. All our technology leadership that we hired in 2020 and even the early part of 2021, focusing on specialized searching, automation, intelligent process automation, and software development is embedded as part of our offering to the customer. The agile practice investments that we have done, all those are actually contributing to the digital revenue growth. We expect that from 9, now we have come to close to around from 9% 2 years back to now we are at close to 35% overall. And we think that during the course of this year, once again, that segment will grow much faster than the traditional testing services element, and we think that should get us closer to the 50% mark during the course of the calendar year 2020.
Thank you. Ladies and gentlemen, we will take that as the last question. I now hand the conference over to the management for closing comments.
Thank you so much. It was really good to see so much of interest and the kind of questions that were asked. Thanks once again for your interest and attention towards Expleo as a business. Sincerely appreciate the effort to join to the call and ask us the relevant questions. Looking forward to your continued support. Stay safe, stay healthy. Ralph, do you want to add anything more?
I can only echo what you already said. Thanks for your interest in us, for your support, for your questions. Even this is always valuable input for us to reflect what we are doing, to communicate even the success that we are having, and even taking it with the questions and the statements even as an advice for all that we even then will consider and even then see that we even implement this, and that is even then when it comes to the execution of our strategy. Thank you again.
Thank you. Ladies and gentlemen, on behalf of Expleo Solutions Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.